Hey everyone, Patrick Jackson with Mann Mortgage here with this week's July 14th market update. It's about 10:45 on the West Coast, and the big news this week was inflation numbers that came in extremely hot. So I want to get right to it and share my screen with you guys real quick. So the consumer price index for June showed year over year, it went from 8.6 to 9.1%. Everything came in above expectation. You can kind of see here, let me get myself out of the way. You can kind of see how it's all broken down. The core, which pulls all this stuff out, was slightly down, but everything else, the rent, energy, gas, food, used cars, those are all up. And one other thing to keep in mind is that the way they do this is the number is replacing last year at the same times number. So with June, it's replacing June of 2020 2021's number. So coming up July, August, the inflation numbers last year for those months were really low. So there's a really good chance that those are going to come in higher than they were last year, and that's going to push this year-over-year number really close to 10%, which is a big number. The other one that came out this week is the PPI, the Producer Price Index, which measures more of the wholesale stuff, and that increased about 1.1% in June, which was above expectations. And so, like I said, that has to do with more wholesale. So really, in this situation, when their prices are going up, they have two options. They could either decrease their margins and their profits, or they can pass those costs along to the consumer. So I will let you decide what you think the wholesalers are going to do in that situation. But hint, it's not going to be good for the consumer. So with those inflation numbers, one thing to keep in mind is that there's a really good chance now the Fed, with their upcoming meeting here coming up shortly, that they're going to definitely probably do the 75 bit increase, a 0.75 increase. There's a chance they might go up a full percentage point. So as we talked about before, inflation is bad for mortgage rates. Raising that Fed rate will help inflation come down. And so that should help my stuff. But by raising that interest rate, the Fed interest rate, that will definitely have a trickle down effect into the stock markets, into your credit card payments, all that kind of stuff. So not necessarily good for other parts of the economy, but something that's a positive when it comes to mortgage rates in general. The next thing I wanted to talk about, and I'll share my screen here once again, is this article that came out from Redfin this week that has to do with listing prices decreasing. And I feel that this is another one of those situations of the housing media really pushing a narrative, and you really have to kind of look at the details a little in more depth, and not just read the headline. So it was all about, listing prices decreasing, and maybe it's a sign of the housing market slowing, and a sign of panic, I guess, for all of us. So here's the numbers when you break them out. So selling above asking price currently is about 52%, which is, that's pretty good. Above half the houses are selling above asking. They're on the market. Average price of price sold above asking is 1.9%. So again, 100K, would be selling for 101.9. So that's, a way to break that out. Accepted offer within the first 2 weeks is 48%, which is very quick. 32%, so a third of them are accepting offer within a week. So they're not staying on market for very long. And the average list to contract time is 18 days, so under 3 weeks. So again, these are all, don't come across as horrible, negative, let's run for the hills type of numbers. And so the second one I want to take, we'll bring up here, this is compared to last year at the same time. So again, they were showing this as, oh, we should worry and listing prices are coming down. But so last year at the time, 53 compared to 52, slight decrease. Average price of sold above asking 2.2 to 1.9. Accepted offer 49 to 48. It stayed at 32% within that, and average list time is still 18 days. So last year at this time, we were in this crazy market, and everybody was so, we weren't concerned at all about anything along those lines. So if you compare it to last year this time, there really hasn't been much of a change. So again, like I said before, just one of those, when you got to always look in more detail at some of these articles that come out. Don't just read the headline and think, oh, the sky is falling. But when you look closer, this is still a very healthy purchase market. And then the other thing I want to talk about this week, let me get out of here, is CoreLogic came out with their loan performance insights for June, which basically measures, how borrowers are doing repaying their loans. So it's important for our industry. So 30 or more days delinquent, it looks like is a slight increase. So last month it was at 2.7%, and now we're at 2.9%. 90 days or more delinquent, which is seriously delinquent, that is at 1.4%, which stayed flat. It did not change month to month. That might go up coming up shortly with the 30 days slightly increasing. But overall, that's still a very, very low number. And then foreclosures are at 0.3%, which was up from 0.2%, which is still very, very low. It's at a multi-decade low. So these are all very healthy numbers for our industry for mortgages. And the other thing to keep in mind is these people are right now are backed by record levels of equity. All these people have a ton of equity, which is going to set them up. They're going to have options. So even if the economy does take a downturn, a lot of these folks are going to have options that, in the housing crash of 2008, they didn't have. Houses were underwater. They did not have that equity. So all good news on that side. Inflation bad. Hopefully they get under control. But the underlying data for our stuff, as far as listing prices, appreciation, equity, how the mortgages are going, all still very healthy. But obviously something we need to keep an eye on as things change. So that's all I had for you guys today. If you guys had any questions or if you need anything at all, please do not hesitate to reach out. Have a great day, and thank you so much. Bye-bye.